Very good morning to all the participants and our esteemed speaker, CA Avinash Gupta sir, and CEO and co-founder of TAXO Academy, Mr. Manoj Kapoor. Uh, the topic for today is the intricacies on UAE corporate tax. We have received a lot of queries related to the UAE corporate tax, and today we have CA Avinash Gupta sir to address all our queries. But before that, I would like to introduce Mr. Manoj Kapoor to say a few words with us. Welcome, sir.
Thank you, Juiji, and hello, friends. TAXO welcome all of you for the today's unique session of the UAE Corporate Tax, where our experts on our panel will answer your all questions. This is our second sessions, and we did, I think, Juiji last session also in the last month. And our experts for today is the CA Avinash Gupta ji. CA Avinash Gupta ji delivered more than 3,000 lectures on related topics and has a very good command. I can say the great command of the UAE corporate tax and the international taxation matters. Believe me, this session is going to be very informative and knowledgeable for all of us and friends. And once again, thank you for the overwhelming response. And we received the more than 100 questions, 100 queries from all of you. And this is the also be the very encouraging for us. So we do the such type of sessions every month. And now I'm not taking it too much of time and passing the baton to the our program coordinator, Jui Garg, to take this session forward. And in advance, thanks to Avinash Gupta ji to give us the time for the today's session. And now over to Jui ji.
Thank you so much, sir, for such lovely words. And I would like to introduce C. Avinash Gupta, sir, today's speaker. He is C. Avinash Gupta, sir, is a fellow member of ICAI of India. He did his graduation from Shriram College of Commerce, Delhi University, and awarded the best student of the college. He is rank holder in CA panel and completed his LLM in the international taxation from Vienna University, Austria, Europe. He has authored four books on international taxation, transfer pricing, exchange of information, and UAE corporate tax. He is also pursuing PhD in law on the subject of taxation of digital transactions. He is also regular faculty on UAE corporate tax and transfer pricing of ICAI and various chapters. He is the chairman of Northern Indian Region Council of Institute of Chartered Accountants of India in the year 2021-22. He is also secretary of SRCC Alumni Association. He is also president of Tax Research Foundation, an NGO doing research in fields of taxation. He's delivered more than 3,000 lectures at a national and international level. He is visiting faculty at National Academy of Direct Taxes, Nagpur, and other regional campuses, Shriram College of Commerce, ICI, ICSI, ICWAI, and management institutes. He worked as finance analyst in PNG. He has won many awards during school, colleges, and CA student life. He's presented many papers, international, national, and regional conferences on various topics of tax. And so this is all about, and I mean, this is the Chris of the CA Avinash Gupta, sir. I welcome him to join the session, sir. Thank you, sir, and welcome.
Thank you, Juiji, and thank you, Manojji. Special thanks to TAXO for calling me and giving me this opportunity to interact with all the participants of this webinar. And I don't know much about the format that you are doing it, but I believe it's a more of a question and answer session. And I'm here to answer all the queries. So, Juiji, either you read the question or allow the participants to ask the questions directly. So, whatever way it is. But one thing I must say and appreciate that TAXO is doing a great service to the profession and the professional life of people by educating them through the database and through the illustration and other things, which whatever is providing in the TAXO software. And I have a chance to look at it and I find it really, really very helpful. And at least I am now onwards, I will be start using your software, what you have done. And with these kinds of sessions, Q&A sessions, I believe it is a two-way learning. It is not only the learning for the person who is asking question, but also it is a learning for all the other attendees as well as the speaker. So it is a learning for me also. So whenever I am going and talking to anybody and there is a Q&A, so the speaker also gain a lot of things out of that session. So I owe you something for this learning that you have that you are creating for myself, as well as all other participants. Participants, one small disclaimer: though this tax law is very new, and most of the provisions are there, but there on some issues the clarification is required from the FTA. So I may not be able to give you the exact answer. What is the situation, or whatever I say is my personal views. FTA may accept, may not accept those things. So that's how we'll start this session with this small disclaimer. So over to Juiji, how
Yes,
we should start and proceed.
sir. Actually, I'll ask the participants to write their questions in the Q&A box, and we can take it up. If I talk about the questions that the candidates have shared during the last few days, we have grouped in different segments, and one of the segments is the free zone person. The main question that the candidates have asked is clarification on exempt income or person in free zone, and also the mainland. So
Sure.
many questions were towards the free zone person area. So if you can give a clarity on that, sir.
Yeah. So you are asking a question, or should I start doing some small session on free zone?
Sir, if you can give a little brief, which I think will cover all the questions that the people
Okay.
have towards the
So
free zone.
friends, as far as this free zone is concerned, so we know that UAE is known for free zones, and we have many free zones which are there in the UAE. So in the UAE Corporate Tax Law, so they have divided all the free zone into two categories. One is the normal free zone that we have, and one is called as a designated free zone. So they said that all the free zones which have been notified under the VAT law, so they are called as the designated free zone, and they may notify any other free zone also as a designated free zone, but till date they have not notified any such free zone. So meaning thereby we are saying that it is only the VAT designated zones are called as a designated zones, and a non-VAT designated zone are now called as a normal free zone. So we divide the free zones into these two categories of free zone. Now, this says that any free zone company or any free zone taxpayer can avail the exemption from tax, or can be their income can be tax free as per Article 18 of the UAE Corporate Law, or UAE the Federal Decree on Corporate Law, provided they fulfill five conditions. What are those five conditions? So they say that there has to be a free zone assessee or free zone taxpayer, and they qualify and they satisfy these five conditions. The first condition is there has to be an adequate substance in the company. So it should not be merely a paper company, and the company should have adequate number of people, number of employees, the decision makers, the office, and all other substance, whatever is a requirement for the substance internationally. So those substance has to be there. The key core generating activities, the core business activities has to be situated in the free zone. Now they say that this core generating activity may not be in the same free zone in which the company is incorporated. So it may be possible company is incorporated in one free zone, and the core generating activities or the substance is created in another free zone. So let me take an example for it. So for example, my company is registered under Russell Khema free zone, or my company is registered under Medan free zone, or my company is registered under the Silicon Oasis or IFZA free zone, or Sharjah Media City, or any other free zone, as one free zone, etc. But I do not have an office there. I do not have people there. But I have an office in another free zone called DMCC. So in DMCC, I have created my office. I have people. I have all the substance that have been created in DMCC free zone, etc. And this both companies is mine, or both offices is mine. So they said, okay, till the time the substance is created in another free zone, till that time it is okay. However, they have put a new condition to it. if you have a company in a designated free zone, so you need to create a substance either in the same designated free zone or another designated free zone. You cannot create a substance in a normal free zone for a designated zone company. So likewise, for a designated company, designate a company in a designated free zone, create a substance in the same or any other designated free zone. Or if it is a normal free zone company, then create a substance in any free zone. So that is first condition what one has to satisfy. Second condition, company should have an qualifying income. So the company who is claiming or who want to claim the benefit of a tax exemption, they should have a qualifying income. What is the meaning of qualifying income? I just take you a bit later. So second condition is that the person should have a qualifying income. Third condition. Third condition, they say that there is an option given to a free zone company that they can say that I don't want an exemption and I may go and opt for 9% corporate tax as a normal mainland company. So this option is given to a free zone company. Now they say the third condition should be that this company who want to claim this exemption should not select or elect or choose to go for a 9% corporate tax. So company should say that I don't want to go for 9% corporate tax and I want to claim the exemption of a free zone exemption that is there. So this is the third condition what they have prescribed in the law. Fourth condition. The fourth condition for a free zone company is that every free zone company has to adhere and has to comply with the transfer pricing regulations. So all the inter-unit, inter-company, with related party transaction with associate enterprise, etc., has to be has to comply with the transfer pricing regulations and transfer pricing law. So this is the fourth condition. Fifth and the foremost and very important condition is that every free zone company who wants to claim this exemption has to maintain its books of accounts and has to get them audited irrespective of any limit on the turnover. So even a company is having only 100,000 or 1 million or 2 million turnover, then also they are required to maintain their adequate books of accounts and they need to get it audited. So this is the fifth condition. So now I am repeating five. So one is the substance. The person should have a substance. The second condition is they should have a qualifying income. The third condition is they should not choose 9%. Fourth condition is they should adhere the transfer pricing regulation. And fifth condition is they need to have an audited accounts. Once I satisfy all the five conditions, then the free zone company is termed as qualified free zone company. And any qualified free zone company is allowed tax exemption. So they will be liable to pay 0% corporate tax. So that is what is there. Now, the most important condition in the entire five condition is the qualifying income. How we should say that what is meant for qualifying income or what amounts to the qualifying income. So that is very, very important part. Now, the law divided the qualifying income into four categories. So that is an important part. One you should know. Once you should know. So what is the qualifying income? They said there may be a four types of income which we call as a qualifying income. Now, what are these four categories? The first category are the income which is generated by a qualified free zone company from another free zone. Another free zone may be designated, may not be designated, doesn't matter. So one free zone company earning receipts, earning income from another free zone. So this is first category. Second category, a free zone company who is earning income from anywhere other than free zone. So they are earning income from a non-free zone company or they are earning income from outside UAE. So whatever way it is, they are not earning from a free zone. So this is the second category. The third category is that the free zone company is earning income which is in the nature of the intellectual property. So qualified intellectual property, right? So if they are earning any income which is an IT company and exploiting of an intellectual property, so that is the third category that they have mentioned. The fourth category this is a de minimis, that okay, you have certain income which is a non-qualifying income, But if this non-qualifying income is within some range, which they will say as a de minimis, then your entire income is deemed to be a qualifying income. So these all are divided into four categories. One, from free zone. Two, other than free zone. Three, intellectual property IPRs. And fourth is a de minimis. So this four category of income, I divide every income into these four category for a free zone company and then test that what are the incomes, whether they are covered in this or not. Now, first category, which is a free zone company earning income from another free zone. So they say all incomes from free zone to free zone are exempt. Whatever is the nature of income, all incomes from a free zone company earning from another free zone company is exempt or is a qualifying income, except certain income which is called as an excluded activity. So all the income are exempt or all the incomes are eligible to be qualifying income, except those incomes which are excluded in. This is one. Second, for the second category of income, which is an income from non-free zone, so they said all income earned from a non-free zone company are taxable. So whatever you earn from a non-free zone or outside UAE, everything is taxable. They are not a qualified income, except they will prescribe or they have prescribed certain incomes which we call as a qualifying activities, income from qualifying activities. So only those incomes which are income from qualifying activities are exempt. Rest everything is taxable. So the first case is free zone to free zone, everything is exempt except the excluded. In free zone to non-free zone, everything is taxable except there are certain activities which we prescribe called as a qualifying activity. Third category is intellectual property rights. So any income earned from an intellectual property right is exempt except if it is in the nature of trademark. If it is a copyrighted software, everything like that, then in those cases, these are all exempt. Other than trademark, copyright, etc. So those are taxable. Remaining all income from an intellectual property right, IPRs, copyrighted software, etc. are all exempt. Fourth category comes is the de minimis. So de minimis says that if your non-qualifying activity or non-qualifying income is up to 5 million or 5% of the total revenue. So whichever is higher. So I have a total revenue of 200 million, and out of 200 million, 5 million or 5% of 200 million, which comes to be 10 million, whichever is higher. So if my non-qualifying activity or non-qualifying income is less than 10 million, then my entire income is deemed to be the qualifying income. Even the non-qualifying income is also deemed to be the qualifying income. So that is how the thumb rule stays. So again, free zone to free zone, everything exempt except the excluded activity. Free zone to non-free zone, all are taxable except the qualifying activity. IPR, everything is exempt except the trademark, etc., marketing activity. And fourth is the de minimis. Now, let me come back to the first. What are the excluded activities? What are the activities on which we say that, okay, these incomes, even though earned from another free zone company, but still it is deemed to be taxable. Now, what are those excluded activities? So they say any free zone company, if they are earning an income from a natural person, the natural person may be sitting in the free zone. The natural person may be residing in the free zone or mainland, wherever it is. So if a free zone company is earning any income from a natural person, then in that case, this income is deemed to be taxable. Example, in DIFC or in ADGM or in DMCC, I have a coffee shop, or let's say I'm a Starbucks, or I am a photocopier machine provider, I am a photocopy printer, etc. And there I provide certain services to the corporates. Okay, I will provide coffee to your to the people who comes to your office, but I will raise an invoice to you. You will send a bill to me, and I will be paid from your company. So it is a deemed to be service provided to the company and exempt. But on the counter, there are people who are coming. There are individuals. There are natural people who comes, orders the coffee, orders the photocopy, orders the printout, and I did this to them directly. Even though these people might be residing in the free zone, might be working in the free zone, but this is an income which is earned directly from individuals or natural persons. So they say any income derived from natural persons are not exempt. So this is the first activity which is an excluded activity which is there. Then there are certain exceptions that you can give fund management and wealth management activities to an individual from a free zone, that is allowed. Other than fund management and wealth management, if you provide any kind of a service to individuals, that is taxable, that is the excluded, or that is a non-qualifying activity. Second, this is any company who is providing in banking services. All the banks which are there in the free zone, whether it is offshore bank, Indian bank, or any RAC bank or ANBD, any bank which is in free zone providing the banking services are also not eligible for exemption. Any insurance activities, what insurance company is doing is also an excluded activity, whether they are earning insurance premiums within the free zone, from companies in the free zone, from by insuring the assets which are located in the free zone. All these insurance activities are excluded activity except a reinsurance. So if they are doing a reinsurance of something, that reinsurance is a qualifying activity. But other than reinsurance, all the insurance activities, insurance premiums earned by these insurance companies in the free zone are deemed to be taxable. They are excluded. Then the next activity, this is any activity which is in the nature of financing and leasing activity, except then there is certain exception. But any financing and leasing activity is also taxable. This is also not an excluded activity. But if you do a treasury and financing activity within the group to a related party, that is exempt. If you are doing a financing and leasing of aircraft, including engines of the aircraft, etc., or any of the components of the aircraft, that is also exempt. But normal financing and leasing is taxable activity. So those activities are called as excluded activities. Next, if any person is earning a rent from leasing, letting out, or from renting an immovable property located within the free zone, and this rent is earned from another free zone company or another free zone, that is also an excluded activity, meaning thereby they are taxable. Even if it is a hotel and hotel is earning an hotel rent, hotel is located in the free zone, that also is a taxable activity. The only exception they say is commercial building or a commercial establishment which have been let out to a free zone company and earning a rent from that commercial establishment. Only that part of rent which is earned from a commercial establishment is tax free, or is not an excluded activity. Otherwise, everything is deemed to be an excluded activity. Somebody may ask a question in the book: what happens if there is a building which up to 3 floors it is commercial, and above 3 floors everything is residential? So what will happen in those cases where the buildings are partly commercial, partly residential? So in those cases, if there is a partly commercial and partly residential building, then all the rent received from the commercial space let out, or let out of renting of the commercial space, they are eligible to for exemption. Any space which any income which is earned from letting out of the residential property, then in that case it is deemed to be the taxable income. So that is what it is being there. Next, if you are doing any incidental or ancillary activity of the above, then in those cases also they are called as an excluded activity. So except these, what I have told you, individual transactions with individual, banking, insurance, finance and leasing, ownership, renting of the immovable property other than commercial property, or any other incidental activities are excluded. Other than those, If the company is earning any income from another free zone company, then it is deemed to be exempt. It is not taxable. So this is the category one. Now, if any one of you have any question on this, so I welcome those questions first, and then we move to the second category. Joiji, anybody have asked any question? So can you please read the question for me?
Sure, sir. Sir, see, Rohit Gupta has asked a question. It's third-party payments to the vendors based on the customer request. However, services not received, provided by our company. Only payment is doing to the vendor and adding our markup and billing it to the client. Supplier invoice is not under our company name, it is under the customer name. Can we book it as purchase to as per the UAE corporate tax?
No, sir. Rohitji, I don't think that it is a purchase. So in this case, I need to read the contract as such. So it is like you are providing a payment services on behalf of your client. And in that services, what you are doing is whatever payment you are making to various vendors, which is ultimately the responsibility of the client. So you are in a way claiming a reimbursement of those service, and you are adding a markup, which is the your services. So I believe in those cases, you should say that whatever you are recovering towards the payment of third party, these payments do not belong to you or your company as such. So you should not book them as purchases, and correspondingly, the part which have been received from the customer should not be booked as sales, because this is not your sales. So these are reimbursement. Only the markup that you are charging or the service fee that you are charging should be your income or should be your sales, what you have to do it. So this is how you should recognize it. However, if contract says otherwise, that okay, you will be paid like this and all the expenses are your expenses, then in that case only you can book it as a purchases. But normally 99% this should not be the case of purchases. Next, ma'am. You are on mute.
Yes, sir. Sorry. The next question is from an anonymous attendee. It says the owner of LLC who involves in administration and business too can get the benefits like salary, accommodation, flight tickets, overtime payment as employees.
Sir, in the LLC, if it is a proper LLC, not a sole establishment, so it is deemed to be a one-person company. In that case, yes, he can withdraw salary, he can take flight tickets, etc. But if it is in the nature of only sole establishment, so in that case, it is deemed to be a sole proprietorship, and in that case, that he cannot draw salary. Yes, he can take benefit of flight tickets and all other expenses. I cannot pay salary to myself, but yes, I can incur expenditure on flight tickets. I can incur expenditure on mobile phone. I can incur expenditure for this related, provided it is related to the business. Should not be like that I am doing a business of doing trading, etc., and I'm taking my family for a trip to US, and I want that all the ticket cost should be booked as an expenditure in the sole proprietor business what I am doing. So if it is related to a business, any expenditure related to the business is allowed as deduction, otherwise it is not.
Sir,
Next, ma'am.
yeah, sir. Thank you, sir. The next question is the ownership or exploitation of intellectual property assets. What about the excluded activity?
I think, sir, for this I am deliberately not taken it here, because this needs to be read with the third category which have been prescribed there, where they say that if it is an eligible intellectual property asset, then it is allowed as exemption. But if it is not it is not an eligible or intellectual property which is prescribed there, and yes, any income like royalties or any income which you have earned on this intellectual properties are also excluded. So I've deliberately not taken this limp here. I will take it along with the thirds.
All right, sir. So next question is I'm selling product from free zone to mainland. So all those sales are taxable.
No, ma'am, I will take this later, because I have talked only free zone to free zone.
All right.
No, no other than that.
Okay, sir.
Next question.
Sir, could you please again rental income for commercial and residential from one building? How works the taxable income?
Madam, for anybody who have asked this question, so for example, I have a building comprises of 9 floors. Out of 9 floors, there are 3 floors which are commercial, and remaining 6 floors are residential. And I have let these floors separately. I have let out commercial floors to commercial establishment, and I have let out the uh, residential floor to various people on residential basis. Whatever rent I receive towards the commercial space, so those rents are eligible, they are not excluded. Those rentals are eligible to be exempt, or the income from those rentals are eligible to be exempt under the corporate tax law. Now comes to the expenditure. So there would be a repair and maintenance expenditure, there would be a housekeeping, cleaning expenditure, there might be some other expenditure like electricity, etc. etc. So if you have a separate expenditure, okay, I did only the repair and maintenance on commercial space, then 100% those repairs and maintenance are exempt. If I did repair and maintenance only to residential space, then this is not allowed. If there are common expenditure, they have to divide according to the space, they have to divide according to some proportion that we take. So proportionate expenditure in relation to the commercial space renting is also allowed as deduction. For example, I have taken a loan from a bank to construct the entire building, then interest is there. Then in that case, I may divide the interest expenditure into commercial and non-commercial, and based on that, whatever expenditure relating to commercial, that is to be booked there, and derive the income from commercial. Remaining interest I can set off against my rental income from residential, which is taxable. So likewise, I need to divide and derive the income from commercial space and derive income from the residential space. Income from commercial space is exempt. Income from residential space is taxable.
All right, sir. So moving on to the next question, Mr. Arjun Rank has asked, tax treatment of civil companies. This is his question.
I think civil companies, if I'm not much aware about the exact nature of those companies, but according to me, civil companies are generally called as partnership firms. So in a partnership firm, they have prescribed 2 ways to tax. So one, they say that any partnership can be taxed as such as a company. So meaning thereby the civil company, if it is in the nature of a partnership, then partnership may be treated as a company and partnership will be taxed as a partnership itself. The second option what they have given is called as an unincorporated partnership, whereby they say partnership as such is not taxable, but whatever is the income of that partnership, proportionate income of partnership will be taxed in the hands of the partner as an individual. So this is called as a transparent process of taxation, whereby the partnership firms are not taxable, the civil companies are not taxable. However, it is taxable in the hands of the partners. So though you may opt for any of them in the first year, if you opt for partnership as such, then for the life of this civil company, this partnership will remain as at the level of the partnership. Or if you tax it in the hands of the partners, then whatever is the proportionate income goes to the partner. In the hands of the partner, it will be taxable as the income from partnership or as the income from business.
Thank you, sir. The next question is from Razia PK, and our question is, what is the tax group registration? Is it the same as VAT tax group?
No. So tax group registration for VAT purposes and for corporate tax purposes are separate. So under the VAT also nowadays, you have to register each legal entity separately, and then you have to attach all the licenses or the TRN numbers with one number as a tax group under VAT purposes. Similarly, for the corporate tax purposes, they have prescribed certain conditions like 95% of the shareholding if it is common, or if it is held by another person more than 95% shareholding or voting rights, then in that case, they can form a tax group. But the FTA is saying each company, each legal entity has to take a separate corporate tax registration first. Then they will link it within the tax group based on this 95% condition, etc. There may be different tax group for corporate tax purposes, or there may be a different tax group for VAT purposes. So both tax groups might be different. They may not be same, or they may be same. That is depending on the exact nature of corporate tax planning or corporate tax compliance that you have done. So based on that, you can create a tax group. As on date, as on date in the FTA portal, tax group is cannot be created because the FTA have not yet started doing this tax grouping for corporate tax purposes, but they will allow us in a due course of time. Yes, individual TRNs, they are issuing it. The individual corporate tax registration is going on. The moment they allow us to do a tax grouping, then for corporate tax purposes, we can do a separate tax group.
All right, sir. Thank you. There's one more question. What is the impact of corporate tax in case of mergers and acquisitions? If I am on the sell side, what will be the impact on my client?
Sir, as far as merger and acquisitions are concerned, whatever you gain out of mergers and acquisitions are always taxable in case of a seller. However, if you are eligible for a participation exemption and you fulfill all the conditions given in the participation exemption, then the income, the gain, the profit that you have earned in the merger and acquisition, including the slump sale. So whatever income that you derive as a seller, so those incomes are deemed to be taxable for the purpose of corporate tax, except you are eligible for a participation exemption. If you fulfill those conditions, then gains are not taxable. That's how I can say. So these plus there are certain regulation with respect to M&A transaction, with respect to the goodwill write-off, and with respect to the revaluation of the assets that you book. So those conditions you can check separately, having an impact in the hands of the acquirer, in the hands of the person who is buying it. From a sell side, it is taxable, other than the participation.
Thank you, sir. Actually, moving on the next topic, because I think it's related to the tax grouping, and there are a lot of people who have asked the questions about on the tax grouping part. So, if you can brief a little bit about.
Let me quickly go with the second part of the free zone, and then I'll move to the tax
Sure,
grouping.
sir. Sure, sir.
So second part, they say that if a free zone company is earning an income from a non-free zone company or an outside UAE company, then everything is taxable except the qualifying activity. Now, what is the qualifying activity they prescribe? They said if you are doing a manufacturing or processing of a good within the free zone, it is a qualifying activity and you are eligible for exemption. If you are processing of any goods or materials, then also it is a qualifying activity you are doing it. If you are holding these shares and other securities of a company for a period more than 12 months. Please mind it, earlier it was intention to hold it for 12 months. Now they have specifically said that any shares or security that you hold for a period of 12 months, then only it is eligible to be a qualifying activity. If you are in the business of operating, maintaining, running of a ship which works in the international waters, etc., and it is shipping companies are also eligible for as a qualifying activity. If you are doing you are in the business of reinsurance, the reinsurance, whether you do a reinsurance from mainland, you do reinsurance from free zone, you do reinsurance for an international company, all kind of reinsurance businesses are tax free. They are eligible activity. Fund management services, wealth management services are also free, are also the qualifying activity. If you are doing an headquarter services, you are doing a treasury function, you are doing a financial leasing business within the related party, then those activities of headquarter, treasury, and financing of the group companies are also qualifying activity. If you are doing financing or leasing of aircraft, etc., are also their parts, components, engines, etc., doing this kind of a financing and leasing activity are also eligible activity. The last two most important activities I will take. First, third country or trading of any goods or any other products in the raw form which are listed on any commodity exchange in UAE or anywhere in the world is also an eligible qualifying activity if it is done from anywhere. Example, EMCC company is selling and buying gold. They are buying it, let's say, from China, selling it in Europe, in Germany. The third country ship, or they are buying it from US, selling it in UAE, or they are buying it from India or buying it from somewhere, selling it in India, whatever way it is. So any commodity, gold is a commodity which is listed in a stock exchange, listed in an exchange, commodity exchange in UAE or any part of the world. Coal, iron, copper, anything which is listed in either London Metal Exchange, India Commodity Exchange, UAE Commodity Exchange, anywhere. So those activities, if it is being undertaken from any free zone, then the trading of these goods which are listed on these commodity exchanges are also qualifying income, exempt whether they are in designated or a non-designated zone, that doesn't matter. Next, distribution of goods or material. Now I say distribution of goods which are meant for resale, which are meant for processing or alteration, etc. Then if company is in designated zone, then only it is deemed to be qualifying activity. A merchant trade, buying from one country, selling into another country, any goods which are not listed in a commodity exchange, these are exempt or these are qualifying income only and only when this is being done by a company which is registered in qualifying or in a designated free zone only. Other than designated free zone, this activity is taxable. So a DMCC company is doing trading into, let's say, some products of a XYZ brand. They are buying it from China, selling it in Africa, all taxable. If they want an exemption, this should be from a designated free zone only. Last, logistics activity. So any company who is in the business of logistics, so whatever income they are earning from logistics active businesses, so all those incomes are exempt. And any incidental to the above activities are also exempt. So that is how they said that these are the incomes which are called as a qualifying income or income from qualifying activities, and these incomes are deemed to be the qualifying income and are exempt from the corporate tax in case of a free zone. So that is what one should look into while doing this activity. So, madam, any question on free zone? Then I'll move to the provisions of tax grouping.
Sir, no, there is no more further question on free zone.
Okay. Now let me go to the another important topic which is called as a tax grouping. So what this provision says, there are Article 40, I think 40, 41 or 42, I believe, or maybe 40 or 41, where they have specified the provisions of tax grouping. So what is this provision of tax grouping? They say that if there is a company and at least 95% of the share capital of this company, or the voting rights of the company, or the profits entitlement of the company is owned by another company, or both are owned by somebody. So either I own this company directly, or I own A company, I own B company, I own C company. All these I own more than 95%, or I own A company owns B company owns C company. So whatever way it is, so if it is like this, then in that case, I can say that yes, these three companies can be part of one tax group. So they can form part of this tax group. However, none of these three companies should have any free zone company. So these companies which can form part of a tax group should be the company other than free zone company. Then only this can be created as a part of the tax group. Then all the companies within that tax group has to file consolidate accounts, has to create a consolidated account, has to create a consolidated return, and all the compliances has to be made at a consolidated level. Any intergroup activity, any intergroup transaction, buying, selling within the group, financing within the group, etc., etc., On those transactions, transfer pricing is not applicable. This is the second benefit of a tax group. Next, if there is a tax group, then all the companies, all the licenses in the tax group should follow same financial year, same tax year, and same basis of accounting. So whatever basis of accounting one is following, another has to follow. So if they are following full IFRS, then everybody in the tax group should follow the full IFRS only. So they can create this tax group, and then this tax group can file everything. From this tax group, if any of the company fails to satisfy any of this criteria, they need to deregister, and that deregistration will be deemed to be from the first day of the tax year. And if the new company is being added, then they can add another company during the year in the tax group, but it will be effective from the next financial year or next tax year. However, if there is a new company which have been incorporated during the year and you want to make form part of this tax group, then it will be forming part of the tax group immediately day it is being incorporated. So these are the provisions with respect to the tax group. Now you can ask your questions about the tax group, and then we will understand and we will tell you, will reply your queries. Luigi, can you start asking question on tax group?
Sir, definitely. Maybe there are few mixed questions. There might be some questions
No
of
problem.
this one as well. So the first question is, can a single owner who owns 100% share of three companies, can these companies be under one tax grouping?
Yes, why not? It can be.
Okay, sir. So the next question from CA Akhil Bhagi. Sir, if a company is doing manufacturing and trading activity, which category will it come?
Uh, if it is doing a manufacturing, then it is categorized as manufacturing activity, and trading activity we need to categorize. So we need to take out the profit from derived from manufacturing as well as profit derived from trading. Manufacturing is eligible activity, qualifying activity for all the free zones. However, trading activity is normally exempt in only in case of designated zones. I don't know whether your company is in designated zone or your company is in normal free zone. So if it is in designated zone, then entire manufacturing as well as trading both are exempt. If it is in a normal free zone, then income derived from the manufacturing activities is eligible, is tax free. Income derived from trading activity is normally taxable, except you are manufacturing or you are producing something which is listed on a commodity exchange, which is generally might not be the case. If it is the case, then yes, you can do it.
All right, sir. Thank you. The next question is, when a free zone company, which is into ship repairing and does repair services to foreign vessel, whether this will be a qualified activity?
No. You are not doing any operation of a ship. You are not leasing a ship. You are not owner of the ship. You are only providing a repairs and maintenance services. And in this case, this is not eligible to be a qualifying income.
All right, so the next question is, sir, can you please give an example for headquarter services to related party?
Madam, headquarter services means that all the headquarters or a company who is holding the shares of the company provide services. So, for example, you have a common HR, and that HR sits in the head office and providing HR services to the entire group. There might be the owners and directors, they are taking remuneration from headquarters and they are providing the services to the entire group. There may be a data management services, there may be an IT services, there may be a back office services, there may be any other any other strategic consulting services which is being performed and provided by the headquarters sitting in a free zone, and they are charging it back on a cost plus basis from the mainland companies or all those entities which are taxable. So they said when they are charging it from the companies, group companies, either by a debit note, reimbursement, or whatever it is allowed as deduction there. And in the headquarter, because it is a headquarter services which is being provided, whatever income or whatever the cost plus they are earning in the free zone, that is exempt. That is called as headquarter service.
Thank you, sir. So the Arjun sir is asking, how can companies owned by common ownership can form a tax group? Holding subsidiary relationships must be there for forming a tax group.
No, sir. Because if these companies are owned 95% by common owners, so I believe FTA will allow to form a tax group. The only thing is they need to create some kind of a consolidated accounts. So I believe that yes, they can form a tax group, but it is again all the tax group has to be approved by FTA. So till now, because they have not yet come up with the provision of creating a tax group, so that's why I don't have a practical example to it. According to me, they can form a tax group and they will allow, because during VAT also they have allowed this kind of a tax group.
All right, so next question is Mr. George is asking establishment of LLC having in the same group.
I don't understand the question.
Okay, Mr. George, can you just be more specific with the question? I'll move on to the next question. And what about the transfer pricing provision in between tax groups?
So within a same tax group, any inter-branch, inter-company transaction are not subject to transfer pricing. However, if there is two tax group, so there is one tax group consisting of 10 companies, another tax group consisting of, let's say, 15 companies. If there is a transaction between this tax group and this tax group company, then it is subject to transfer pricing. Within the tax group, there is no transfer.
All right. Thank you. So the next question is, as per UAE corporate tax, for the tax group, a company should own and not individual, and therefore individual owners cannot form tax group. Please clarify.
I have already clarified this, so let us wait for FTA for this.
Sure, sir. So the next question is, sir, can an overseas registered PVI entitled entity having trade license in JAFZA be added to the tax group? What is the poem in the UAE?
So, sir, both are separate questions. What is the poem? So, if your BVI company have a place of effective management in UAE, then BVI entity itself is deemed to be resident in UAE. The moment it is resident in UAE, it is like treated as a income. All the income of the company is treated as a normal income and taxable in UAE itself. Now comes to the second question about the whether the branch which you have opened in a Jafza, Jabal Ali free zone, whether they are eligible for the exemption given under the corporate tax law. The answer is yes. Even if a branch is there, branch is eligible to be a qualified free zone person and they are eligible for exemption. So this is the second. Third, whether this company or the branch can form part of the tax group, answer is no. They have specifically mentioned that anything which is anybody who is into the free zone, so they are not or they cannot form part of the tax group. So these are the answers for your three queries that you have asked.
Thank you, sir. Mr. Sandeep Jana asked, a UAE limestone mining company located in UAE and paying royalty to Fujiraha government on extraction.
So, sir, there is a specific exemption for them. I think in Article 6 of the Federal Decree Law, they have specifically prescribed who are exempt person. In the exempt person, they have already said anybody who is in extractive business and non-extractive business, so like mining company and all, they have specifically mentioned those who are paying royalty to the Emirate government, to the local government, are exempt from corporate tax. They are not subject to corporate tax at all. And I think 2-3 days back, FTA have also issued a guide on extractive and non-extractive business. You may read it in detail. From there also, you can derive it very well that these companies are not subject to corporate tax, because they are part of exempt income, exempt persons.
Thank you, sir. So these were the questions till now. And moving on to the next, one of the questions has been asked, a brief explanation on transfer pricing rules, especially related to the rated parties.
I don't know what you want to ask in this. So transfer pricing is a bigger subject. If you are doing any transaction which is between the associate enterprises, which are normally called as related parties, then all transactions are subject to transfer pricing regulations, and you need to justify your price. You need to maintain, or any UAE corporate tax law company or any company who is liable for corporate tax has to maintain a local file and a master file if their turnover exceeds 200 million dirhams, and they are also liable to maintain the country by country reporting, CBCR, if their group turnover exceeds 3.15 billion dirham. So if you are covered under any of this limit, then yes, you need to maintain all kind of transfer pricing documentation, transfer pricing study, etc. But if you are a free zone company and going for an exemption, then irrespective of all limit, you have to comply with the transfer pricing law. So that is the provision which is there with respect to the transfer pricing. Or if you have any other specific questions, so please specify the question.
Okay, sir. And there's another question. It says, can we create a tax group for establishment firm and LLC firm together under parent company? Sorry.
That I need to check, but I believe no.
All right.
I believe no.
Sir, next question is, what is the participation exemption for M&A that we were talking about?
Sir, आप खोल के देखिए एक बारी. Participation exemption means that if the one person is owning more than 5% of the turnover or 5% of the share capital, or minimum investment is 4 million dirham, and they are also subject to other conditions, like they have to pay, the company in which you have an investment should be paying taxes in the other countries, and they are owning directly or indirectly these number of shares, then whatever dividend you are earning from them is exempt. Whatever capital gain you are earning on transfer of these shares are also exempt. This is the participation exemption which is prescribed in the law. So more than 5% holding or 4 million investment in original form. So that is what you need to see for participation exemption.
I would request the participants, if they have any further questions to the topics that we have discussed today, or other than that, if you have any questions, please write it in the Q&A box, because the question that we have received are basically, we have covered in the topics. They are very basic questions. If I say they have asked about to understand the implementation of corporate tax.
Or you may unmute any of the participant if they want to ask a question. They can raise hand and you can unmute them.
Sure, sir. There's another question. It says, in UAE gold market, where the turnover is more than 200 minimum of one company, the wholesale and the retail rate fluctuates very much. What is the transfer pricing impact while doing the transactions under unrelated customer with price fluctuation?
Sorry, come again.
So it says, talk about UAE gold market where there is too much of fluctuation. What is the transfer pricing impact while doing the transactions with unrelated customers with price fluctuation?
So transfer pricing is not applicable if you are working with an unrelated customer at all. The transfer pricing is applicable only when we are doing transaction within related party. Still, if you are a price fluctuation, but I believe in gold market, the yesterday's closing price is the price at which the transaction is happening during the day. So if you are doing a transaction at a price which is yesterday's closing price, so I believe there is no further compliance what you need to do. But if you are doing a transaction which is a different than this, then of course we need to analyze this transaction more in detail, and based on that only we can advise, or we can tell you that how this can be done.
Sir, Nikunj sir has asked, can you explain the tax implementations on high sea sales?
Sir, I have told you, in case of a high sea sale, this is also called as a merchant trade, where you are buying from somewhere and selling within the seas. So those high sea sales are exempt from tax if this high sea sale is being done by a company which is located in designated free zone. A normal company who is a free zone company, if they do these kind of high sea sale, then these are taxable. Only exception is that the goods which you are selling are listed on any commodity exchange. If these are done by a mainland company, it is always taxable. So that is how we can divide this high sea sale into three categories. Everything is exempt in designated zone. Everything is taxable in the mainland. Everything it is taxable in the normal free zone. Only exception is if it is a commodity like coal or iron ore or copper or anything which is listed in a commodity.
Okay, thank you, sir. The next question is whether dividend paid by UAE company to another UAE company is taxable to the
Sir, dividend paid by any UAE company to any person, whether individual, partnership, or any foreign company or whatever, is exempt from no tax at all on the dividend paid.
Thank you, sir. Receivable from related party is due for more than 400 days. Would opening receivable need to be registered and the interest of 400 days to be accounted is in opening BS?
किसने पूछा मैडम ये क्वेश्चन? Can I have the name?
Sir, anonymous attendee, they have not asked.
Sir, this is not India. This is UAE. Please don't mix Indian law with UAE law. I don't think that there will be any provision in the law where you need to provide interest. However, if your terms of contract says that you need to charge interest beyond certain number of days, then yes, you need to provide this in the opening balance.
I would request the participant if they have any further questions because the 1 hour of the
participants are testing the speaker whether he knows the subject or not.
No, sir. I mean, there are people are also appreciating the session today. Actually, even in the session itself, since we have completed 1 hour and we are running short of time, if I request the participant if they have any specific query or they want to take up another topic from the speaker, they can write it down on the Q&A box, and we'd like to take it up. Harish Sharaf sir wants to probably ask a question. Sir, I have allowed you to speak. Mr. Harshit Sharaf, sorry. You can unmute yourself and you can ask a question.
Yes, Harshitji, please ask. We are not able to hear you.
Or sir, you can write your question in the Q&A box. Since there are candidates who might be asking few more questions, I would like to inform all the candidates that since there are too many questions and there are a lot of queries related to the UAE corporate tax, we are coming up with our fourth batch of master course in UAE corporate tax, which we are going to start from 19th of January 2024. And we are going to address all the important topics that actually have been asked today. The topics that we are going to cover is introduction on UAE corporate tax, then PE, POEM and tax grouping, registration return penalties under corporate tax, computation under the corporate tax, related transfer pricing, GAR and party transactions and free zone person. So anybody who's interested, we are also offering a 15% discount till Christmas. So CA Avinash Gupta sir, CA Dr. Atul Kumar Gupta sir would be the speaker, and we are going to take elaborated discussions on all these topics, which were probably the need of the hour, and a lot of people have queries related to that. Sir, we have got few more questions if you would like to take. Sir, the question is from CA Akhil Bhagi. It says, sir, any problem, specifically GAR, in formatting a holding company to hold shares in common shareholding companies after 31st December 2023?
No, I don't think. If it is a genuine restructuring and that all these restructuring have commercial substance and commercial reasons for doing so, then I don't think GAR will be attracted. But if it is a restructuring or a realignment which is done only and only to attract and take benefit of the corporate tax law or evading taxes, then yes, GAR provision may attract. It is more of a fact driven normally a genuine restructuring done within the group is not or subject, it should not be subject matter of GAR.
The next question is again on GAR. Is GAR applicable on transfer of business from mainland? Mr. Nimish has asked.
Yes, of course, it may attract. It may attract, but if it is a genuine shifting of business and you are shifting everything to the free zone, and then GAR is not applicable. Any tax department of the world cannot stop a taxpayer in redoing the business. So tomorrow, if I want to exit UAE and I want to open a company, let's say in a Bahrain, where there is no tax till today, GAR will not be applicable to me. Yes, if I only shifted the business on papers. Everything remains in the mainland. Everything remains as it is. No change. My people sitting in mainland are doing the entire business, entire activities, and I merely shifted the operations in the free zone company. Instead of money receiving in the mainland company, you are receiving it in a free zone and claiming an exemption there by creating some kind of a XYZ to fulfill all the condition. Then yes, in those situations, GAR may be applicable. But if something genuinely is happening where you are shifting your entire base to a free zone, then no GAR is applicable.
Thank you, sir. And sir, an appreciation message from Vakar Panwakar. Many thanks, Vinashji, for such a wonderful session. And the next question is transfer of business from mainland to free zone.
I have already told you, for
Yes,
transfer of business, this I have already covered.
Sir, Mr. Sharaf has said company is in designated free zone, then third party port transfer will be 0% or 9%.
0%. In a designated free zone, any third party port shipment, merchant trade, high sea sale, everything is exempt.
So there's one more request says, can you please explain Muwafa's package? It's
What is this?
MUWAFAQ. Probably.
Can you please, the person who have asked it, can you please raise this?
Can
you please unmute and ask this question, because I don't know about this package.
All right, sir.
If there's something money is coming, then let us understand. Manojji, let us understand this package. I heard first time.
Anjum Tanveer has asked, GAR is...
You allow this participant to speak. So let us understand. There might be something interesting.
Rajesh, if you want me to unmute, please let me know. Anjum Tanveer has asked, GAR is applicable for taking a high salary by owners and directors of the company.
Madam, GAR is not applicable in those cases, but transfer pricing regulation is applicable in this case. So all the remuneration taken by the owners, directors, managers are subject to transfer pricing compliance. If you are complying with transfer pricing regulation, then it is not a problem. If you are not complying with the transfer pricing, then these expenditures are not allowed. GAR is not applicable, transfer pricing is applicable. The moment you justify them under transfer pricing, matter is over. No GAR.
So what if somebody shifts to gift city in India?
Madam, India का session नहीं हो रहा ना.
Yes, sir.
So gift city, there are benefit. मैं बता देता हूँ, वरना person में से कि इनको आता नहीं है इसलिए नहीं बता रहे. So gift city is a part and parcel of India. However, there are certain benefits which have been tax exemptions which have been prescribed for any company which is located in the gift city as per Income Tax Act 1961. So keeping those benefits, if your company is eligible to avail those benefits, generally these benefits are given to banking companies and all the companies who are into the offshore financial markets. So if they are investing in US market or a fund management services, etc. So if you are in these categories, then yes, under the gift city, there are certain exemptions which have been given under the Indian tax laws. As far as UAE or the other thing is concerned, it have nothing to do with it. All the companies in gift cities are deemed to be resident in India only. So they are not like a non-resident. So there is no benefit of non-resident being into the gift city.
Right, sir.
Next.
Yes, sir. Sir, Zia Rizvi has given us appreciation. So thank you very much, Vinashji and TAXO for enlightening the members. And before I
वो बताओ वो पैकेज तो बताओ क्या है.
Sir, Razia ji ne, if she wants, I can unmute her, but she has not given me any go ahead to unmute her. Probably we'll take it up in the next session. Now I'd like to invite again Mr. Manoj Kapoor, sir, because he wanted to address the team, all the members. Over to you, sir.
One second. Yeah, I'm already on mute now. Yeah, thank you. First of all, I want to say thanks to our panelist, CA Avinash Gupta ji, and all the participants who spare the time to join this session and make this session very successful. And my request, if anybody missed any question, please raise to us. And I'm giving this confidence. Our team will revert you shortly. And this particular question related to package, they can also ask us the question in detail. We give the answer to you. And secondly, and as in the start of the session mentioned by Avinash ji, and TAXO is try to provide you the best solution on the GST and also with the course. जी आप जूही जी already give you the brief about the course which we are coming in very shortly. But other than this, we also have the one digital repository on the UAE corporate tax, which is very useful for in your day-to-day operations and in day-to-day practice, where all the features like updated articles, regulations, decision, FAQ, you get at a one place, which is also well supported by the flowchart diagrams, illustrations, and the case laws, especially from the global jurisdictions, which we going to be keep you updated and enrich your knowledge on the UAE corporate tax. And this program also cover the monthly webinars on the UAE corporate tax, and you get the chance to meet the experts on the UAE corporate tax. And I can say that this solution is going to give you the edge in the market over others. And because this is the online solution is based on the AWS, so you can access anywhere, anytime at 24/7, and is also we are giving at a very reasonable price, and Juiji also giving the 25% discount till Christmas, and you can connect with us, with our team for demo or any query anytime, and Juhi is the spoke, and her number, I think all of you already have her number. And in the end of the day, I want to say the thanks to the all the once again, thanks to the all the participant, and also wish you very happy Christmas and happy New Year in the advance. Now I think Juiji to take it forward to make a formal closure ceremony.
Thank you, sir. Before I conclude, probably Razia ma'am would like to say, Razia ji, you are unmuted. If you want to ask your questions, please go ahead.
Sir, I have heard about this Muwafaq package on website, but I didn't get the time to learn. So, do you have any idea about that?
No, madam, I don't have any idea, but I will check it. So
Yeah, it is in FTF site.
Yeah, I'll do that, and I'll let Chuiji know about it, and she will communicate to you.
Yeah, it is for small and I think small and medium enterprises. It is to encourage them. So, can you please?
So there is I think there is a small business relief which is available. So the small business
that's okay, but it's another. It is shown as Muwafaq package.
Let me see. So I think there was something with relate to the license fee that you give to the government. It is nothing to do with corporate tax. But still, I will check it out. I believe, yes, it is a small business. So when we go to the Ministry of Economy for registering a SME company, so they give a 2,000 dirham discount in the license fee. So I think this package which is this might refer to, but I don't know the name of that package.
Yeah, Muwafaq. So please look into it. I think it is in tax FTA website.
Let me check.
Okay, thank you, sir.
Thank you, Razia ma'am. And with this, we come to an end of this wonderful session. Special thanks to CA Avinash Gupta sir for making this session so wonderful and so interactive. And you have answered all the queries, sir. Thank you very much. It was a very an entertaining and very informative session, and I'm getting a lot of appreciation from the participants. If I can read out, Mr. Kivi has said that thank you for the lovely informative webinar. Many of my doubts have been cleared on free zone and high sea sales. And CA Bagi said, I say thank you very much for the sharing your knowledge. Once again, I thanks all the participant to participate on a Saturday morning, and special thanks to CA Avinash Gupta sir for giving us his time and sharing all this information and insight with us. Very thanks to Mr. Manoj Kapoor sir, the CEO of TAXO Academy, for bringing us together and such for conducting such a wonderful session. And in the end, we'll be sharing the recording of this session with you all for you to have a revision with it. Again, one reminder that we are going to start a session from 19th of January, and the questions that are left unanswered would be taken up in all. It is going to be a 6-day program with 12 hours of live classes. So we are going to take one topic in a day, and after the topic is completed, we are going to share the presentation as well as the recording of the day. Thank you, Avinash sir, and thank you, Manoj sir.
Thank you. Thank you, ma'am.
Thank you.
Thank you, sir. Have a lovely weekend ahead, sir. Thank you.
Okay. Thank you. Thank you.